I want to start with something that I think changes everything about how you should be reading what is happening in the gold market right now. Over the past several months, the mainstream financial media has been relentlessly screaming about a structural collapse in precious metals, pointing to massive global sell-offs and widespread institutional panic as definitive proof that the great multi-year bull run is categorically over. So I decided to ignore the noise and dug deeply into the actual verifiable vault flows, the hidden sovereign reserve data, and the obscure macroeconomic indicators that truly drive this complex global space. And what I found is not what most people are being told. We are currently witnessing a historic, unprecedented disconnect between the fundamental reality of global international finance and the short-term, highly manipulated price action flashing red on your trading screens. Legendary billionaire investor Ray Dalio has categorically stated that we are rapidly entering a terrifying period of massive wealth destruction for anyone left holding traditional fiat currencies, warning repeatedly that the rapidly changing world order is creating deep systemic fractures in the global economy that simply cannot be easily or quickly repaired by central banks. Yet, despite this dire, historically significant warning and the continuously escalating global geopolitical crisis, physical gold has recently experienced an incredibly painful 21% drop in its spot price. This massive contradiction raises a critical, urgent question that every single individual investor and institution must answer immediately. How exactly does a structurally sound, historically proven safe haven asset suddenly crash in the absolute middle of a systemic worldwide economic crisis? What comes next for the everyday investor trying to survive? The real answer to this profound mystery lies deeply hidden in the intricate, opaque plumbing of the global financial system, specifically within the complex mechanics of sovereign debt, international trade imbalances, and desperate central bank interventions. What we are seeing right now on the charts is absolutely not a fundamental shift in the world's belief in gold as the ultimate store of value. Rather, it is a massive, entirely forced liquidation event, driven entirely by desperate, over-leveraged sovereign nations fighting for their financial lives. Let me explain exactly how this hidden process works so you can protect yourself. Here is the mechanism step by step. Sovereign nations around the developing and developed world are currently facing an unprecedented combined energy and currency crisis that is rapidly pushing their fragile domestic economies to the absolute brink of total, unrecoverable collapse. Take the nation of Turkey, for example, a country that currently imports a staggering 98% of its domestic natural gas requirements and is therefore highly dangerously vulnerable to any sudden fluctuations in global energy markets. When the global price of Brent crude oil suddenly spikes and international energy import costs skyrocket beyond all previous projections, the local domestic currency immediately begins to severely fracture under the immense, crushing pressure of rapidly widening national trade deficits. To prevent immediate, catastrophic hyperinflation and to artificially stabilize their collapsing domestic economy, the central bank of that nation is completely forced to intervene massively and aggressively in the highly volatile foreign exchange markets. What they are actually facing in this dire moment is what institutional insiders call a massive sovereign margin call. To successfully defend their fragile currency peg and ensure their current government can actually survive the immediate terrifying financial shock without facing a domestic revolution, they must urgently liquidate their most liquid, most universally accepted, and most valuable financial asset, their physical sovereign gold reserves. They are categorically not selling these reserves because they suddenly hate gold or because they believe its long-term intrinsic value has been permanently destroyed. In fact, it would be sheer, undeniable financial suicide for any sovereign nation to permanently abandon real, universally recognized money right now as the global fiat currency system literally crumbles and burns around them. They are selling strictly and solely because they are being absolutely forced to begin monetizing their sovereign reserves to generate the immediate desperate US dollar liquidity required to prevent a total catastrophic and immediate national economic collapse. If you want to survive this intense, unprecedented market volatility, uncover the hidden truths of the global financial system, and truly understand the real macroeconomic forces driving the world economy today, subscribe now. The dangerous global contagion of this forced institutional liquidation is spreading rapidly across multiple emerging and developed markets simultaneously, creating a massive, unstoppable domino effect that is temporarily, artificially suppressing the true price of precious metals across the board. We are currently seeing nearly identical, highly concerning vault flows and severe economic distress signals emanating from the central banks of major global players like Russia, Poland, China, and India. Each of these powerful nations is currently grappling with their own unique, highly complex set of geopolitical and internal economic pressures that are actively forcing them to temporarily alter their long-term gold accumulation strategies. Russia, for instance, is currently operating under the dark, looming shadow of a severe internationally mandated April 2026 export ban deadline, a massive geopolitical constraint that mandates they urgently and drastically recalibrate their entire sovereign reserve strategy and immediately liquidate massive portions of their physical holdings just to blindly fund their ongoing, incredibly expensive wartime expenditures and artificially stabilize their heavily sanctioned, isolated domestic economy. Meanwhile, massive global economic superpowers like China and India, traditionally recognized as the undisputed, unstoppable heavyweights of global physical gold consumption, are strategically, quietly, and temporarily pausing their massive multi-year sovereign accumulation phases. They are incredibly sophisticated, highly intelligent market participants, and they are deliberately choosing to step back into the shadows and patiently let this massive destructive wave of forced sovereign liquidation completely play out and exhaust itself entirely before they resume their aggressive long-term buying programs. This specific central bank behavior represents a classic, highly calculated de-dollarization pause, and it is absolutely not a fundamental, permanent reversal of their stated long-term strategic goal to completely divest their national reserves from failing Western fiat systems. These elite central bankers know full well that when a desperate, economically trapped nation is suddenly forced by the market to immediately liquidate exactly 58.4 tons of physical gold directly onto the open global market simply to cover crippling, unexpected energy import costs, it instantly creates a massive temporary black hole vacuum in global demand, driving international bond yields absolutely haywire and violently pushing spot prices down to completely artificial, heavily suppressed levels. But this exact, highly specific market dynamic is exactly where the mainstream financial media completely and utterly gets the narrative completely wrong every single time. The loud, panicked talking heads on financial television simply look at the rapidly dropping prices on their monitors and immediately, blindly declare a permanent structural collapse, deliberately terrifying retail investors into capitulating and selling all their precious holdings at the absolute, literal bottom of the market cycle. However, elite, highly informed institutional investors look at the exact same set of macroeconomic data and clearly see a massive, necessary systemic reset, a painful but required clearing out of the weak hands in the market before the next massive historic leg up can truly begin. Here is where things get important for your personal portfolio. If we take a step back from the daily noise and rigorously analyze historical market data from previous, highly similar crisis periods, specifically looking closely at the turbulent, chaotic years of 1976, 1983, 2008, and 2013, we clearly see this exact same macroeconomic pattern playing out with absolutely startling, undeniable precision. In every single one of these historical instances, a sudden, unexpected systemic shock to the global economy forces a massive, unavoidable margin call across all leveraged sovereign and institutional market participants, leading directly to a highly painful, completely indiscriminate forced liquidation phase where gold prices temporarily plummet as everyone desperately scrambles for immediate US dollar liquidity just to survive the week. But financial history also provides a vital, incredibly lucrative lesson for those rare individuals who are actually willing to pay close attention to the data. Every single time, without fail, once the aggressive forced selling finally stabilizes and the massive sovereign margin calls are fully and completely met by the market, the underlying precious asset violently and aggressively explodes upward to reach new, completely unprecedented all-time highs. What we are bravely navigating through right now is absolutely nothing less than the biggest, most significant gold reset in modern financial history. And legendary, highly respected macroeconomic investors like Ray Dalio are urgently, repeatedly warning us to be fully prepared for the massive, explosive upside that will inevitably and predictably follow this temporary period of extreme market pain. The deep structural fractures currently present in the underlying global fiat currency system are simply far too deep and far too severe to ever be permanently repaired, and global central banks are merely desperately buying short-term time by rapidly liquidating their precious metals simply to defend their rapidly failing domestic currencies from total annihilation. Now, let me tell you exactly what the specific, highly actionable three-phase playbook looks like so you can successfully navigate this historic, terrifying volatility and perfectly position yourself for maximum, life-changing financial gains. Phase one of this playbook is the forced liquidation phase, which is exactly the painful, chaotic market environment we are suffering through right now as we speak. During this highly volatile period, your primary, overriding objective is absolute psychological resilience. You must absolutely not panic under any circumstances, and you must categorically not let the relentless fear-mongering mainstream media manipulate you into stupidly abandoning your long-term strategic investment positions. You must quietly and patiently let the desperate forced sovereign sellers completely destroy themselves and entirely exhaust their massive physical inventories while you quietly, methodically, and intelligently gather your remaining investment capital on the sidelines. Phase two of this strategy is the absolutely critical stabilization phase. This vital transitional period occurs exactly when the massive, crushing sovereign margin calls are finally and completely met by the broader market. The aggressive, one-sided vault flows finally begin to permanently neutralize, and the desperate, highly expensive currency peg defenses are either successfully completed or totally permanently abandoned by the central banks. During this crucial phase two, you will distinctly notice a massive, undeniable drop in overall market volatility and a clear sustained leveling off of the negative downward price action, strongly signaling to the smart money that the absolute worst of the forced institutional dumping has finally concluded. Finally, phase three is the ultimate, incredibly lucrative structural re-entry phase. This is the exact precise moment when the major global geopolitical powers, having barely survived their respective terrifying domestic currency and sovereign energy crises, suddenly realize they are now dangerously, incredibly underallocated in actual physical real assets and immediately begin to aggressively rebuild their depleted sovereign reserves with an absolute unyielding vengeance. This massive synchronized global rush by central banks to frantically restock their entirely depleted national vaults will instantly trigger a massive, unprecedented generational buying opportunity that will aggressively propel market prices far beyond any previously imagined historical limits. To truly understand the sheer, overwhelming magnitude of exactly what is coming next for this market, we only need to look closely at the absolute latest, highly confidential institutional projections. Elite, highly connected financial analysts at massive banking institutions like J.P. Morgan recently released highly exclusive, incredibly actionable internal data projecting long-term physical gold prices to eventually hit absolutely staggering future targets of $6,300 to $8,000 an ounce in the coming years. Yes, you heard that specific data point right. The absolute smartest, most well-funded money on Wall Street is currently quietly preparing for a monumental, historic, upward revaluation of precious metals across the entire global financial system. Even while openly acknowledging the severe, painful current market volatility and the massive ongoing forced sovereign liquidations, these same elite institutional analysts have firmly established a rock-solid, absolutely hard fundamental price floor of precisely $4,000 to $4,500 an ounce for the entirety of the next major macroeconomic cycle. This mathematically and structurally means that your total potential downside risk from our current market levels is fundamentally and structurally capped by the sheer, completely unavoidable gravity of massive, overwhelming central bank physical demand that will inevitably and aggressively flood the global market the absolute second this current painful systemic reset is finally and completely finished. This is absolutely not just a simple speculative short-term trade setup. Deeply understanding and immediately acting upon this highly specific macroeconomic information is an absolute fundamental wealth preservation imperative for absolutely anyone who truly wants to protect their family's long-term financial future from the completely inevitable, mathematically certain massive devaluation of all global fiat currencies. The highly influential International Monetary Fund has also quietly, subtly corroborated these exact same underlying macroeconomic trends in their recent obscure reports, specifically noting the completely unprecedented, massive historical shifts in exactly how desperate sovereign nations are currently managing their vast sovereign wealth in the direct face of rapidly escalating global geopolitical fragmentation and warfare. When you intelligently combine Ray Dalio's dire macro warnings, J.P. Morgan's incredibly aggressive future price targets, and the hard, undeniable mathematical data conclusively proving that this current terrifying market drop is merely a temporary, forced institutional margin call rather than a fundamental, permanent trend reversal, the exact path forward for your money becomes incredibly crystal clear. You are currently being handed a profoundly rare, historically significant, once-in-a-lifetime opportunity to aggressively front-run the absolute largest, most powerful institutional players in the entire global financial system right before they are inevitably forced by mathematics to desperately re-enter the physical market and aggressively bid up the price of the very same asset they are currently foolishly dumping. The loud, completely ignorant mainstream financial media will absolutely continue to relentlessly feed you a false, terrifying narrative of permanent fear and total systemic collapse, desperately hoping you will immediately capitulate and sell all your precious physical holdings at a massive loss directly to the very same elite Wall Street institutions that are currently quietly preparing for the next massive historic global bull run. You must absolutely entirely reject that false media narrative right now and rely exclusively instead on the hard, hyper-specific, undeniable macroeconomic data points we have just rigorously analyzed together. Remember the highly specific, incredibly important figure of exactly 58.4 tons. Remember the extreme, terrifying vulnerability of a sovereign nation foolishly importing 98% of its critical natural gas. Remember the unyielding structural reality of the looming April 2026 geopolitical export ban deadlines. These are absolutely not just random, meaningless numbers pulled from thin air. They are the precise, mathematical, undeniable proof that the current terrifying market dynamics are entirely 100% artificial and completely mathematically unsustainable over any meaningful long-term time horizon. As the massive, unstoppable global de-dollarization movement continues to violently gather absolutely unstoppable, world-changing momentum, the entire world's desperate reliance on physical gold as the absolute ultimate, completely uncensorable, perfectly reliable Tier 1 sovereign reserve asset will only continue to increase exponentially year after year. The desperate sovereign nations that are currently aggressively liquidating their precious national holdings are doing so only under extreme, completely unbearable economic duress, and their profound future desperation to eventually frantically replenish those massive lost physical reserves will inevitably create a global demand shock completely unlike absolutely anything we have ever seen in our entire lifetimes. Therefore, your personal financial strategy must be firmly and permanently rooted in absolute, unyielding patience and completely unshakable, profound conviction in the true, underlying long-term macroeconomic fundamentals of the global monetary system. Do not ever allow the loud, terrifying short-term market noise to ever distract you from the undeniable mathematical long-term reality of the rapidly changing global world order. So, here's your final, highly specific, extremely concrete behavioral directive as we all carefully move forward together into this highly volatile, incredibly dangerous global market environment. Watch the daily, highly volatile fluctuations of the Turkish lira incredibly closely, as it currently serves as the absolute ultimate perfect macroeconomic canary in the coal mine for massive emerging market sovereign currency stress. Watch the daily international price action of Brent crude oil absolutely relentlessly, because skyrocketing global energy costs are the exact, specific, primary fundamental trigger, violently forcing these massive, devastating sovereign margin calls in the absolute first place. Be absolutely, completely, and entirely patient, fiercely maintaining your long-term strategic investment focus, while the terrified, over-leveraged weak hands are violently and permanently shaken completely out of the global market. Let the completely undeniable hard macroeconomic indicators and the massive shifting international vault flows precisely guide your exact perfect timing for your eventual structural re-entry into the market. And absolutely above all else, do not let a completely temporary, entirely artificial phase of desperate forced institutional liquidation make you panic and completely miss the absolute biggest, most incredibly lucrative upward price move in the entire recorded history of the global precious metals market. Rebuild your portfolio for the future, deeply understand the profound mechanics of this global reset, and decisively position yourself for generational wealth before the rest of the world finally wakes up to the truth. Watch the LRA, watch Brent crude, be patient, and do not let a phase of forced liquidation make you miss the biggest move yet.